Ever wondered how to ride the wave of a strong market trend? Let me introduce you to the Forex continuation trading strategy. Step 1. Identify the prevailing trend in the market. Step 2. Wait for a temporary pause or consolidation. Step 3. Enter the trade as the market resumes its movement. This strategy helps you capitalize on the trend's continuation. Want to master it? Start practicing today? Here's a quick guide. Step 1. Identify the dominant trend. Is it an uptrend or a downtrend? Step 2. Wait for a pause or retracement. This is your consolidation or correction phase. Step 3. Look for breakout confirmation. This signals the trend is resuming. And there you have it. Trend identification made simple. Now go out there and trade with confidence. Navigating the market can be tricky, but here's how I do it with tools and indicators. First, I use moving averages like the 50 EMA and 200 EMA to define trend direction. Next, I draw trend lines and channels to spot trend boundaries and consolidation zones. Chart patterns like flags, pennants, and triangles help me identify continuation patterns. Volume is optional, but rising volume on a breakout can confirm a trend continuation. Finally, I use Fibonacci retracement to ever notice those sharp moves in the market? They're often followed by a small channel against the trend, known as bull or bear flags. Then there are pennants, those small symmetrical triangles that pop up after a strong move. And don't forget ascending or descending triangles, which are continuation patterns depending on the trend. Finally, there's the cup and handle, a bullish continuation pattern with a rounding bottom and a small pullback. These patterns can be your guide to understanding market trends. So, next time you're analyzing charts, want to master the market? Here's a quick entry strategy. First, identify the trend using higher time frames like H1, H4, or D1. Next, wait for consolidation and spot a continuation pattern. Set your entry point on a breakout, like above a flag's resistance. Place your stop loss below the consolidation zone or last swing low-high. Finally, take profit using a measured move or key resistance support levels. Follow these steps and watch your trading game elevate. I'm about to put you on to 3 risk management tips that will change your trading game. Tip number 1. Risk only 1-2% of your trading capital per trade. Protect your capital, unlocked. Tip number 2. Use trailing stops to lock in profits. No more missed opportunities. I got you. Tip number 3. Avoid trading during major news events unless you're experienced, because your portfolio deserves care too. Duh. Which tip are you trying first? Here's the 50 EMA flag breakout strategy in a nutshell. First, check if the price is above the 50 EMA. This means we're in an uptrend. Next, look for a bull flag pattern after a sharp move. Enter the trade when the price breaks above the flag resistance. Set your stop loss just below the flag support to manage risk. Aim for a target equal to the height of the flagpole. And there you have it, your quick guide to mastering breakouts.